welcome everyone. I'm Kingsley, and today we'll be sharing the latest updates from Allocations Capital Investor Group. This is our 30th call, and today we have a great range of speakers to present. We'll start with a brief background to the investor group and then cover the investments and recent deals. And then we'll have speakers across space, biotech, clean meats, and DeFi. And we'll finish off with Q&A and a brief tutorial on how to use a Slack. And just to note, this call will be recorded for those that couldn't make it. We're now at over 240 investors from over 20 countries, and our mission is to co-invest in the world's most ambitious entrepreneurs. Some of the companies we've invested in include Relativity Space, Monzo, Coinbase, and Robinhood. And some of our values really separate us from the other investor groups. And we have Ryan to share a bit more on that.
Thank you, Kingsley, and welcome everyone again to our 30th investor call. Happy to see everyone here again today. We go over this every week, and I'm just going to reiterate again. We're a radically proactive group of transparent angel investors who participate in blockbuster deals, all while contributing to the collective growth both individually and into the companies that we invest in. Through our shared and individual domain expertise and knowledge, all while respecting the privacy of both the individuals in the group and the companies we invest in. And this is what provides extreme value for the investors in this group, and this is what makes us Allocations Capital, essentially. So happy to see you all here today, and looking forward to speaking on space in a little bit.
Thank you, Ryan. Axiom Space was probably the most popular deal in June, and combined we have invested over $2 million in the company. And in July we have more very active deals in the Slack, and here's a selection of some of the most active deals.
Thank you, Kingsley. Yes, we have quite the impressive lineup for July. We have SpaceX, Space Fund, EnergyX, Repair Biotechnologies, and Turn Bio, all fantastic companies, and we're looking forward to investing in each and every one of them. So you can find more information in the Slack group about all of those.
Thank you, Ryan. Now let's start off with some space trends. We have Ryan Kriser from Helios Capital and Meagan Crawford from Space Fund.
Thank you, Kingsley. Again, everyone, I'm Ryan Kriser. I'm founder and CIO of Helios Capital. We invest in frontier technology and with a specific interest and passion in space technology, which comprises a significant portion of our portfolio. Since SpaceX successfully launched humans on a commercial grade rocket to the International Space Station, we've seen some of the most significant traction and interest in not just space investing, but one of the near-term trends that I'm seeing is space tourism. And with that, we would essentially be able to fly on a space plane to an Axiom space station where we would have a one-day stay before being rerouted to a lunar gateway, where we would be able to take in views of the lunar surface before then taking a SpaceX Starship to Mars. So just one of the trends that I'm seeing near term that's going to really catapult the industry towards greater solar system exploration, colonization, and it's really going to be amazing. So this is just the beginning. And we also have with us today Meagan Crawford, who's the managing partner of Space Fund. Honored to have her here. I respect her and her team. They have some fantastic insight into the space industry. I know Meagan's excited to speak today. She's got some other trends she's going to touch on, and some exciting news that she's going to share about Space Fund. They had an exciting exit. So Meagan, thank you again for being here today, and take it away.
Thanks for the great intro, Ryan, as always. Very pleased to be here. And as Ryan mentioned, Space Fund had our first exit last week. Meagan Space was sold to a private equity firm called Redwire. They've set up a new group to consolidate a couple of their space companies there. And so we were very excited to have our first exit only 9 months into the fund. I don't know if that's a record, but I'll take it. So very excited to make that announcement. But yeah, and as far as the trends that I'm seeing, Ryan, very similar to what you were talking about with private space travel. One of the things that we've seen recently, space has historically been very much a B2B economy, business to business, right? And we've seen more and more business plans crossing our desk recently that are very consumer focused, B2C. And so we're seeing a real kind of shift towards this more consumer focus, whether that's space flight, whether that's sending your DNA to the moon, or sending your ashes to space after a loved one passes away, or consumer products that are going to be manufactured in space and brought back down to sell. So that's a very interesting thing to watch develop, and something that's fairly new in the industry. And then the other point that I'd like to make is just about the current virus situation and kind of economic situation in the world. And what we've seen is that the space industry has been much less affected by that than many other industries. And there's a couple reasons for that. Most space companies have received the essential designation, so they've been able to continue work. About 25% of the global space economy comes from government budgets. And so that's provided a lot of stability to these companies that have large DoD or NASA contracts or ESA contracts in Europe. And that, combined with the fact that the global space economy is not really very correlated at all to the wider global space markets. And we saw during the 2008-2009 downturn that space was less affected than many other industries. And so we've seen that trend continue through this. So we did have several launches that slipped, and schedules that have slipped on several different projects. But the launch cadence has started to pick back up again. We're starting to kind of get caught up on those launches. So we're getting those items into space a little bit later than had hoped, but still within a reasonable time frame. So we're very hopeful that that's going to continue, and that the space industry is a little bit more insulated from the craziness that's going on than many others. So both, I think, very positive trends that we're seeing moving the industry forward.
Fantastic updates. Thank you very much, Meagan.
Thank you, Ryan. Thank you, Meagan. And congrats again, Meagan, on the maiden space exit.
Thank you.
And next we have Sergio Ruiz from Methuselah Fund to talk about some biotech updates.
Yeah, congrats on the exit, by the way. That sounds exciting. So biotech is a really interesting space. As you all know, we're not only insulated, but we're actually thriving. It's sad to say that it takes a worldwide pandemic to move things along, but I wanted to talk to you about two things. One of the first things is Operation Warp Speed. So you may or may not be aware that the government decided to spend $2 billion to pretty much destroy any barrier that a potential COVID vaccine would have to get to market. So it was criticized heavily, saying, historically it's taking decades to come up with a vaccine. I mean, curing a disease takes time and effort, but things are being proven wrong. There's already a drug headed by AstraZeneca and Oxford in phase 3. Moderna will start in July, their phase 3. And there's a slew of companies like Johnson & Johnson that haven't started, but they will start very soon. So what you're seeing here is the government stepping in to deregulate themselves. So Stephen Hahn, the FDA commissioner, decided 3 weeks ago in a speech, was saying that things are not just thriving, but they seem to be setting up a new normal. So it's very excited for biotech to see a lot of deregulation. It seems like the focus is going to be safety, and then the efficacy is going to be, a whole nother stage. So what we'll probably see is, this time the government stepped in with $2 billion to make sure things go along. But as the COVID becomes a thing of the past and people start realizing, why not do this with cancer? Why not do this with Alzheimer's and all these other diseases of aging also? That money is going to come. Those $2 billion are going to come from private industry. So a lot of deal flow is happening. This is trend number two, actually. We see partnerships, big pharmas partnering up with smaller companies. We have two big, deals that are brewing up in two of our portfolio companies that we're very excited about. Now is the time, if you want to go out and raise a fund, if you have the ability to have the deal flow and the know-how to keep your ear to the ground. There's a lot of deals to be had. There's a lot of companies. The valley of death, unfortunately, for startups have gotten deeper and wider. But at the same time, that just means those who are positioned to come in and buy them are going to roll up a couple of technologies that are synergistics, and what you'll end up having is a lot of value creation. $10 million companies with $10 million assets together, put together, they're 50 million. So a lot of smart people are doing this, and that leads us to trend number 3, which is SPACs. I don't know if you are familiar with this. If you're in the space industry and investment, you probably remember Virgin Galactic and how it was a really great deal. What a SPAC essentially is a special purpose acquisition company. Imagine it's a very complicated, sophisticated vehicle, because you're kind of marrying the private equity world with the public world. But if you have all the players, all the components there, historically there's a 6x to 13x that can be made in 18 months. So the way it works is, you go out and raise, let's say, $100 million, and you take that public. So you're taking public a pile of cash, and they're called blank check companies, because really what you're saying is the management has $100 million and they have a public vehicle to go after an acquisition. So let's say you go out and spend 80% of those $100 million in a company that's worth 250 million, that's willing to, do a very specialized deal. There's companies out there that need the capital infusion, and there's founders out there that would like to see their liquidity come forth. So it's happening. SPACs have historically been going in and out of favor, but in the last 2 years, I mean, in 2019, it was a $13.8 billion way to get to market. This year alone, it's been almost $10 billion worth of SPACs. It's actually, we were talking to Douglas Elanoff, which is the name partner of the premier SPAC legal agency, and he was telling us that now 50% of any IPO is actually related to a SPAC. And the latest and greatest that was announced just this past week was Ackerman was putting together a $1 billion SPAC. So if you think about it, now they're starting to compete with private equity funds for bigger companies. What they're going to try to do is go out and buy a $2 billion company with $1 billion that's probably hurting, or there's circumstances that are not very favorable. And then the SPAC managers come in, they make sure that the company is operational and such, and they go out, they add value to the market. And usually when there's a deal like that happening, it really trickles into the SPAC management team and the early SPAC sponsors. So it's a really exciting thing. We have looked into creating one of those in the longevity space. Unfortunately, we don't have, if we go out and raise a $200 million SPAC, we don't quite have a company that's big enough to acquire, but we have been looking at potentially doing a bundling up of assets. That said, it could be a very overhead expensive process. But nevertheless, now's the time to raise a fund. Now's the time if you want to raise a SPAC and create liquidity for your investors. Those are a lot of really good trends happening in biotech because the sector is thriving.
Fantastic. Thank you so much, Sergio. and particularly excited for more SPACs, especially for our portfolio companies. And next we have Brian Frank to talk about clean meats.
Thank you, Kingsley. My name is Brian Frank. I'm the general partner of FTW Ventures. We're an early stage investor in food and agricultural technology, as well as an advisory group to kind of help accelerate the future of the food world, the $8 trillion food and agricultural sectors. We have a number of investments in biotechnology already, new protein production, as well as novel products in plant-based proteins, as well as software and SaaS. And we're actively looking for new deals in hardware, automation, SaaS, AI, big data, as well as more biotech in this space. We think the food world has a long way to go to revolutionize. And if COVID has taught us anything, the fragility of the ecosystem right now and the resources required to do it will not scale for the future of our food system. And so we're actively investing in all categories in the space. Our background is that I've been involved in the clean meat industry since 2015. I was an early advisor and mentor to Memphis Meats when they were going through the IndieBio program and accelerator. And since then have watched and worked on a number of different financings around the clean meat sector. And so I want to talk with you about what's going on in that sector, the trends that we're seeing, the opportunities that are there right now. I call where we are in clean meat evolution kind of Gen 1, or the first inning of this very long baseball game or cricket match, where the first generation of companies are really pioneering some of the sciences and technology, as well as learning about the challenges with scaling up cell culturing and production. And let me put that in context, because for cell culturing and production, there's a long history in the medical community of developing cell cultures for different tissue replacements and tissue therapies. But in the food world, we haven't been doing a lot of this. We have been focused on pure ingredient production through things like precision fermentation. And so we're very well in the food industry, understand precision fermentation, but when you layer on all the complexities of culturing cells in a matrix or a structure, that adds a lot of complexity and a lot of capabilities that need to be developed. They're still being developed in the clean meat world. And so that's why I say it's inning one, it's the very early days of this evolution. Many of you probably know Mosa Meats, which was one of the pioneers and is currently out looking to raise a new round. They are the grandfathers of this industry and have shown, you know, producing a burger at hundreds of thousands of dollars per unit. But since Mosa Meats came to market and showed their product several years ago, many other companies have rushed into the sector, including Memphis Meats and a lot of other name companies, Blue Nalu, New Age Meats, Future Meat, a ton of company. A lot of them concentrate in the US, but some in the EU, some in Israel, and now we're seeing a lot more growing within these Asia region as well. And I'll talk a little bit about the regional differences and what's going on from a regulatory perspective. One of the trends that we're seeing is that every company today has to build their own technical infrastructure and their own science for their product. So that's caused a lot of these mega rounds that you're currently seeing in this sector, like Memphis Meats raising, you know, over $100 million in their latest round, because they're pioneering a lot of the early science and technology, as well as learning how to build a pilot plant or facility that's going to be necessary to build their next scale of product. And all of that is proprietary knowledge and IP today. There is no shared infrastructure or shared components that these companies are using, and they're not communicating with each other. They're living in their own silo because that's important from an IP and a protectability perspective. But eventually, these companies will realize they're better building together or having groups that provide them services or capabilities. Historically, in the food world, we've had things like co-packers and co-manufacturers that doesn't exist in the meat industry yet, in the cultured meat industry. But that's coming. And that's the great thing, is we're seeing the Gen 2 kind of infrastructure companies starting to be developed. And these include several different key technologies that need to be developed. One is the serum-free medium in which these cells are cultured. So for most of you that know about this space, fetal bovine serum, or the serum that comes from cows, is extracted and used to grow the cells because that's where they normally grow in vivo. Well, ex vivo, they're going to need a different serum because that's very costly and they don't want to use animal products in their production. So they're moving to all plant or non-animal based materials. 6 companies have already declared they've moved to non-FBS based medium, but more need to go that route. And there are companies now producing serums as a startup to all of these different companies. The other thing is cell line culturing. So when you're developing these cell lines, they have to be called what's called immortalized. They have to live for a long time and proliferate. a lot of cells, because to make meat, you need a lot of cells combining. And these proliferation cells these cells that proliferate need to live for a very long period of time and keep producing. And so immortalization has been something that each company has been doing on their own cell lines. We're very excited about companies like Culture Bioscience, which is here out of the Bay Area, which is actually doing cell line and cell strain development for a wide range of biomanufacturing businesses. And we've talked to a number of clean meat companies, and they're looking at things like Culture as the AWS for cell line development. So they don't have to do this all internally. They can rely on third-party services to help bootstrap and build their company rather than raising all this money and taking all this time internally. We're also seeing that in scaffolding, which is the stuff that creates structure for clean meat. We're also seeing that in bioreactors and process development. So there's a lot of infrastructure that's now being built that'll make it easier for future clean meat companies, and that existing clean meat companies can leverage to outsource as a service so they don't have to build all of this stuff internally. The second thing is that we see as a trend is everybody's moving into pilot plant development. So Memphis Meats is already working on their pilot plant with their new infusion of capital. Mosa Meats is raising more capital to scale up their pilot facility, but no one is at commercial scale. And so this is the one thing we always caution people. This is going to be a very long process to get from bench level science to pilot plant, first generation product, maybe hundreds of people taste it, to then thousands of hundreds of thousands, millions of people in a commercial setup. And each of those scale ups introduce new technical and scientific challenges with going across those things. So we have to give them time and money to evolve across those scales. The one that we're most excited about that we believe is probably going to be the fastest to market is probably Blue Nalu out of San Diego and Hawaii. They have cultured fish cells. They're using a chimera approach that marries animal cells with plant-based cells for things like scaffold, and they're going to be able to bring this product to market. They believe in the next 2 to 3 years, you'll be starting to see this product show up, which is a very accelerated market opportunity for them relative to everybody else. And that brings me to the other thing that's going to kind of restrict market adoption at this point, which is the regulatory framework in which these products will live. So there's been a lot done in the US as of late between a consortium of clean meat companies, GFI, and legal counsel that is helping to advocate for the US to actually regulate these products through a combined group of the USDA and the FDA. They've agreed to jointly regulate it. They haven't given the framework back. And so we're still in the industry waiting to hear what that framework, that go-to-market framework, is going to be for clean meat. However, in the EU, we believe for most countries it's going to be covered under novel food regulations, which will take about 1.5 to 2 years to get product through the regulatory process or pathway. And those of you that are familiar with Mosa Meats, they already have that kind of built into their plan that they're going to need 1.5 to 2 years to go through that process. In Asia, we're actually seeing 2 countries specifically take a lead in this evolution, one being Singapore, which as a country has already dedicated capital, food tech specifically, to culturing and fermenting products. They've dedicated $200 million as a country to scientific and technical direction in this space, but all of their kind of sovereign wealth funds and government-backed funds like Temasek and GIC are also playing very heavily in the space. So we believe Singapore is on a road to move this whole industry forward very fast. And then very recently, Japan announced that they are putting in frameworks and regulatory approval for hopefully later this year that they can disclose as well. So we believe Japan and Singapore will have a clear path to market. And the last thing I just want to highlight is that strategic partnerships is going to be critical for a lot of these companies to succeed. And we're seeing a lot more in the strategic partnership realm. Tyson's, Ingredion, ADM, Cargill have all made investments in precision fermentation of proteins or in clean meat. We believe that these companies will benefit from having the knowledge and expertise of a lot of different industry players as well. Again, if anybody would like to follow up on clean meat, feel free to hit me up at FTW Ventures. We're happy to provide some advice and guidance on where this market is going long term.
Fantastic. Thank you so much, Brian. And really great insights there. We've seen the fantastic returns from the Gen 1 of clean meats, the Beyond Meats, Memphis Meats, Mosa Meats, and we're excited for Gen 2, the infrastructure of clean meats. Next, we have Andrew Kang to talk about DeFi. Over to you, Andrew. Oh, sorry, we need to unmute Andrew.
Can you guys hear me?
Yeah.
Hey guys, I'm Andrew. I'm a private investor in the crypto space. I've been an investor in DeFi specifically for around the last 2 years, and also just a general power user of DeFi as well. Really kind of the two trends that I want to talk about are the proliferation of liquidity mining and automated market makers. So liquidity mining has been something that's been on the scene for around a year or so, but it's really come to the attention of everybody's radar. I'd say within the past 2 weeks. I'm sure a lot of you guys have heard about compound finance and the ridiculous yields that some investors and traders were generating. Initially it was on the scale of something like 200 to 300%, depending on how you were playing that trade. It's since been kind of eroded down to 60% to 100%, depending on how you're playing this trade as well. But those are still ridiculous yields, even on a short-term time horizon. And really, a lot of people look at these yields and they say, hey, is this sustainable? Is this some type of Ponzi scheme or a scam? But at the end of the day, it's not. So what essentially is happening is people are using the same model of VC money subsidization to be able to get people to be using their networks. And really, like a lot of these networks, what they initially suffer from is a lack of liquidity, because they have this kind of chicken or the egg problem where they don't have users trading on the network, they don't have people providing liquidity, and so they can't have market makers or other people come into the network. So what they're essentially doing is paying these people, right? They're providing a subsidy in the form of this token for people to be using this network, and then kind of get the ball rolling, because as soon as you get some liquidity, that ends up getting more liquidity. And the hope is that a lot of liquidity stays around, and that can create that can be really sticky. And because these tokens also accrue value from usage of the network, that these tokens can have real meaningful value from the cash flow generated from these protocols. This has been going on for quite a while. One of the first examples of this happening was in synthetics around a year ago. It's been kind of trialed and used in many other different protocols throughout the year. But, those strategies were kind of, relegated to, I would say, a scale of a few $1 million, with a lot of kind of the liquidity farming programs out there today. That capacity has since expanded to 100 million plus, and it's generated the attention of a lot of prop trading firms, some centralized exchanges even, and also some borrow and lending desks that have now started to kind of dip their toes into the DeFi space. And then the second trend I want to talk about is that of automated market makers. So some of you guys are familiar with Uniswap or Balancer or Bancor. These are essentially exchanges which don't have centralized order books. So there's not people that are putting limit orders on these books. There's really only people that are swapping in and out of assets. And the way this happens is that there are people that provide liquidity to the system, and there's a formula that is able to essentially tell users that are looking to make trades with these exchanges what their prices are going to be, depending on how much liquidity is in this model, in this exchange, and also what token pairs they're trying to exchange, and also how much tokens they're trying to exchange. And the reason why this is really exciting is because when you think about traditional order book based exchanges, they have a lot of friction in terms of getting market makers on board, because for them to be able to convince market makers to trade on their platform, they need these market makers to be essentially guaranteed that they're going to be making good use of their capital, that it's a cost efficient exercise for them to be able to spend the resources to connect with their APIs, to send funds on the exchange, to do some sort of credit risk assessment on their exchange as well. What these automated market makers allow you to do is essentially bootstrap liquidity by making the liquidity provisioning process or the market making process really easy, because instead of you having to onboard professional market makers, you can have just traditional regular retail investors or traders press a button and provide liquidity and be able to earn a yield for providing that liquidity as well. A lot of the current models like Uniswap and Balancer, they're quite primitive. and they have their trade-offs and disadvantages. But there's a lot of really interesting new automated market makers being developed that take into account things like inventory management, your delta exposure, ways to reduce impermanent loss. So the field's definitely advancing really fast, and I'm really excited to see where it goes over the next few months.
Fantastic. Thank you so much, Andrew. And yeah, I agree. We have seen the emergence of the DeFi economy, and we've seen some companies do 5 to 10 X's in the past 12 months. And one of the companies leading the space is Compound. And we have Calvin actually in the Slack from Compound. And yeah, many of us have participated in some of the DeFi deals. Well, to conclude, today we covered background to the investor group, some of the investments and deals, and we had speakers across space, biotech, clean meats, and DeFi. And now we'll finish off with Q&A. But thank you all for everyone else for joining. We're excited to have you in the Slack, and we'll see you all in the Slack. Thank you.
Thank you, everyone.
So let's go on to Q&A. So some of the most common questions in the Slack is, how does the Slack work? What are the different channels? So we just put some of the key ones here. We have introductions, announcements, prospects, DD channels, community, and then these general thematic channels. Niels can unmute everyone as well if anyone has any questions. So a common question is, how do I bring a deal? So you just can message one of the admins and then post the deal in the prospects channel. So we have a pretty good format here so that we can get the kind of core parts of the deal, where we have the name, how much you're personally investing, which is a very good indicator. We have the co-investors and a bit of background to the deal. And then people can hit the thumbs up if they like the deal. If the deal is popular, we will make a DD channel for that deal where we can all do group due diligence on the deal. And then we'll usually follow up with a group DD call and then start onboarding for the deal. And then for the person that brought the deal, we have, they can post post-deal updates in the channel. How do I pledge for a deal? So we use spreadsheets to be super transparent to everyone in the Slack. When there's a new deal, we'll spin up one of these spreadsheets, which you can find in the channels. And you just put in your name and the amount you'd like to pledge. And then once it hits usually 100K to 200K, then we will start an SPV. And then some of the reasons why many of the deals we invest via SPVs. So as a investor group, we benefit from group due diligence and that we can all put smaller tickets into each deal. So for some deals, you may have someone putting in 5K and you may have someone putting in 50K or 100K. And this allows all of us to be able to get into the top deals. Also, with SPVs, you can have secondary opportunities later on through the sale of SPV interests. So let's say I invested in Beyond Meats in the seed round, and by Series B, it's gone up to $1 billion valuation, and I want to exit my position. So if I'd invested directly, it would be very hard to sell my interest. I would have to get the board approval of Beyond Meats. But generally through SPVs, upon the approval of the manager, you can find another buyer for your SPV interest. And this transaction takes place outside of the portfolio company. So that's why SPVs are becoming increasingly popular. And also with SPVs, we can leverage the due diligence of the deal organizer. Okay, fantastic. Well, thanks all for joining. If you have any other questions, we have the admins in the Slack that can answer anything. And our next call is in 2 weeks. So thanks everyone for joining, and we'll see you all soon.